Hey there, and welcome to our channel. Imagine this, the year is 2008. The global financial system is collapsing. Markets are in free fall and fear is everywhere. Yet one man, Warren Buffett, steps in and invests billions of dollars while everyone else is selling in a frenzy. Fast forward a few years and those decisions make him billions. Now think about the COVID-19 pandemic. When businesses shut down and the world seemed to stop, smart investors identified opportunities in tech and healthcare stocks. Those who acted early saw their wealth skyrocket. This is the secret of the world's top investors. They see opportunity where others see disaster. And today I'm going to show you how you can do the same. How to spot opportunities, act strategically, and turn crises into wealth-building moments. Are you ready? Section number 1, Why Crises Create Opportunities. Let's take a closer look at why crises often present the best opportunities for investors. When a crisis hits, fear spreads like wildfire. Investors, consumers, and even governments start pulling back. Stocks plummet, real estate prices drop, and businesses struggle. But here's the key. These drops are often driven by emotion rather than logic. For example, during the 2008 financial crisis, the stock market fell by over 50%. Yet, many of those companies were fundamentally strong. They weren't going bankrupt. People sold out of fear, creating discounts for smart investors. The same principle applies to real estate. During the 2008 housing crash, property prices in cities like Las Vegas and Miami dropped by as much as 40%. Those who had cash and courage bought properties at bargain prices and saw immense profits when the market recovered. Question to viewers. Have you ever thought about why some people get richer during crises while others lose everything? Let us know in the comments. Section number 2, Historical Examples. History is full of examples of investors who capitalized on crises. 1. The Great Depression, 1930. While millions were struggling, billionaire investor John D. Rockefeller famously bought stocks during the market crash, saying, "The best time to buy is when there's blood in the streets." His investments laid the foundation for even greater wealth. 2. The dot-com bubble, 2000. When the tech bubble burst, companies like Amazon lost over 90% of their value. While most investors ran away, Jeff Bezos stayed committed, and early buyers of Amazon stock saw their investments grow exponentially. 3. COVID-19 pandemic, 2020. In early 2020, markets tanked as lockdowns paralyzed economies. But those who invested in e-commerce, tech, and healthcare stocks like Zoom, Tesla, and Pfizer saw incredible returns within a year. Takeaway. These examples show one thing. Crises reward the bold and the informed. The question is, will you be ready for the next one? Section number 3, Strategies for Investing During Crises. Now let's get practical. Here are 5 detailed strategies to help you navigate and invest during crises. 1. Sector-based investing. Focus on essential industries. For example, during COVID-19, grocery stores, medical supply companies, and delivery services thrived. Research ETFs or index funds tied to resilient sectors. 2. Stock screening. Use platforms like Yahoo Finance or Morningstar to screen for undervalued stocks. Look for low PE ratios, strong cash flows, and minimal debt. An example? Apple's stock dropped by 30% in early 2020. Smart investors who bought then doubled their money in just 2 years. 3. Real estate. Look for distressed properties or foreclosures. These are often sold at huge discounts during recessions. Focus on locations with long-term potential, like areas with growing populations or infrastructure development. 4. Build a cash reserve. Allocate 10 to 20% of your portfolio to cash or short-term bonds. This gives you the flexibility to act quickly when opportunities arise. 5. Diversify with alternative assets. Consider gold, silver, or even cryptocurrencies. While volatile, these assets can hedge against inflation and currency devaluation during crises. Question to viewers. Which of these strategies resonates with you the most? Or do you have one of your own? Share it below. Section number 4, Risks to Watch Out For. Crises can be profitable, but they're also full of traps. Here's how to avoid the most common mistakes. 1. Chasing high risk. During the 2020 crypto boom, many new investors jumped into unverified tokens. When the crash came, they lost everything. Research is your best friend. 2. Overreacting to news. Remember, bad news sells. Don't let every headline sway your decisions. Focus on long-term fundamentals. 3. Ignoring liquidity. Don't lock up all your money in long-term investments. Always keep enough cash on hand for emergencies. Section number 5, Mindset of a Successful Investor. Investing during a crisis is as much about mindset as it is about strategy. Here's how to develop the mindset of a successful investor. 1. Embrace fear. Recognize that fear creates opportunity. If you feel scared, it's likely that others do too, and that's when prices drop. 2. Think long-term. Avoid the trap of short-term thinking. Markets recover, often faster than expected. Stick to your investment plan. 3. Learn constantly. Read books, watch educational content, and surround yourself with experienced investors. Knowledge builds confidence. Inspiring quote. As Warren Buffett says, the stock market is a device for transferring money from the impatient to the patient. Section number 6. Conclusion and call to action. Crises are inevitable, but they don't have to spell disaster. With the right strategies and a calm mindset, you can turn any downturn into an opportunity for growth. If you're ready to take control of your financial future, hit the like button, share this video with someone who needs it, and subscribe to this channel for more content like this. Now I want to hear from you. What's your plan for the next economic crisis? Share your thoughts in the comments, and let's build a community of smart, resilient investors.